Good morning, it's Friday, March 11th. After a 15-hour drive yesterday, I posted. I'm getting some hate on Twitter, which is, I guess, normal. Twitter is just who enjoys the trolls on Twitter? Again, if it go back to your family must be super proud of you calling people names on Twitter. My whole thing on Twitter is usually doesn't bother me, but I posted that I did a 15-hour drive yesterday, and in the Tesla, I did stop 7 times. The average stop was 10 minutes. It added 2 hours to a 15-hour drive. And when I say added, you're getting out every 2 hours of your car. It's fantastic. If you're so concerned about getting from point A to point B as fast as you can, drive a gas car. Perfectly fine. Don't hate on those of us that actually enjoy getting out, charging the car, having 2 dogs, get restless in the back every couple of hours that I would have had to stop anyway. But again, these people who say, oh, he must have a lot of time. Yeah, I got a freaking lot of time on my hands. If you had invested in Tesla in 2018 like I did, yeah, you'd probably have a lot of time on your hands as well. Don't hate on Tesla. Look at that stock price. Again, a lot of people seem to like it just because you hate it, Billy Bob. But, sorry, rant over. Okay. So, I took the day off yesterday, drove 15 hours from New Jersey back to Atlanta. I'm back in my home studio office here. Wanted to talk about a couple of things. First thing, kind of the big thing yesterday that I had been talking about for a while, Oracle earnings. And when I looked at Active Trader Pro this morning, it hadn't really done much. It was down, it was up. It was kind of, the initial report from earnings brought it from 76 down to 70. I did not get in on this play. I felt comfortable with it. And I still feel comfortable with it. If I bring it up on Active Trader Pro and on TrendSpider, again, the buy-in, it triggered us on March yesterday in the morning at 75.10. Today it is trading for 75.48. So you haven't necessarily lost anything if you got in there on my recommendation. I don't think that this is a falling knife. Their earnings weren't that bad. They didn't announce a huge stock buyback. They didn't announce any additional dividend. They just kind of guided randomly. The stock is trading at a low here. Their earnings per share were $1.13. That's minus 2.59% against Q3 2021. The adjusted earnings per share was down 4%. So it wasn't as stellar as the previous earnings that took a gap up. That was a huge earnings surprise. That was plus 14.5%. This $1.13, if you go back to Q2, it was $1.03. So they're up, but they probably shouldn't have been drawn up to $100. This is probably an $80 stock. I still think you've got 10% in this move if we get back to a healthy market. The PE on this one is 29. The dividend is 1.67. I think it's a high PE. Let's go into Fidelity and look at some of the comparables, if we will. And I didn't log in on this one. Still getting totally set up here in the setup that I had before. So let's look up Oracle. ORCL is the symbol. And if we look in Fidelity, by the way, big report on the amount of the Fidelity owners I tweeted out. So if you look at their PE forward, this year's estimates is 15.99. The industry average is 53.02. So I think it's got room to go. Again, the 52-week performance on this one is 6.28%. When you look at Amazon, they've got them lumped in with Amazon, Microsoft, IBM, and Intel. When you look at the 52-week performance, the only one that's beating them is Microsoft. And Microsoft has just been stellar, but the Microsoft PE ratio is 30.56, Oracle's 15.99. The beta, 1.44 for Oracle. The beta for Microsoft is 1.30. So there's quite a few differences between the two, obviously. I think based on the run up of Microsoft, I would bet that Oracle probably would be a little bit better, but who knows? Maybe Microsoft announces a big split, kind of like Amazon did, hiding their, well, we'll get into that. But the Oracle earnings were out. They were good. Didn't see a pop like we did. I'd still, again, I probably will buy this one at some point. Their 52-week low is 65. That was just reached on the 11th of March. So that was yesterday. It looks like it was. Did it hit it yesterday? I don't see it for some reason. Oh. Where is that? Maybe it was, yes, earning. It was around the earning, 65. So, they're at their 52-week low. Their 52-week high was just in December at 106. So, here we are, sitting here. The other one that I wanted to go over was DOCU. DocuSign, they reported earnings. Their guidance was low. And this is a stock, in my mind, this is a stock that I think is here to stay, but they're not making money. And that's the problem in this market. If you don't make money and your guidance is low, you're gonna get hammered. In aftermarkets, that now they're trading at 77. They were all the way down to 74. It doesn't look like it's moved since the earnings were announced. The RSI, this is not necessarily overbought. It was overbought prior to earnings. The RSI in midday yesterday at about, looks like a 2 o'clock candle, they were up at 65. So it wasn't hugely overbought. Afterwards, though, when you saw it dip down to around the $76 range at 520, there was a MACD cross up. But that MACD cross up on a 5-minute chart was just a fake out. Doesn't look like it's moved all that much. It went from 75 up to 78. So again, it's a kind of stock that in my mind, I think it's here to stay. The guidance was weak. I just think it hasn't been beaten down enough in today's market. So that's one that I wanted to look at. Their guidance led the street in the market. It's just killing the stock. At some point, this becomes attractive. Those are my notes. The next one, RIVN. RIVN is RIVN. And this one's getting hammered in after hours. It is, this was $180 stock, if you don't know. I will put out this warning. And again, maybe I'm just a Tesla lover. I've had the car for 3 years now. My car was built in the freaking tent in Fremont. It's a great car. I love it. Haven't had any maintenance issues on it whatsoever. It's got panel gaps. Who the freak cares about panel gaps other than some guy who's going to keep this for 30 years? But you know what? The panel gaps are something that I've learned to live with. It's just something when you wash your car, it annoys you. But you know what? Forget about it. Car runs great. There's been no problems with it. Everybody chasing Rivian was saying this is the next Tesla. Well, you're seeing. If you bought this at the 100 IPO, 120, 180, and you didn't trade this one, and you were saying, well, I'm going to hold on to this one. You obviously don't know how tough that car business is. The margins are tough. Essentially what Rivian said is their supply chain is killing them. They can't build the cars. They've got their reservation holders. The car is a great looking truck. I mean, I haven't sat in one, but essentially I love the truck. They stole everything from Tesla. They did things right. When you see something good, you steal it. So the nickel is killing all of EVs. If you've heard about nickel in England, they've halted trading. Nickel is Russia's export. So you're looking at a huge nickel market that's going to kill the EV business as long as nickel is. Yesterday, Tesla raised their prices by $1,000 just because the batteries. That's what their cost on the batteries are going to go up over the next few months. So they're getting killed on commodity cost. So they raised it up by $1,000. I mean, So that's what's going on with the EV market. Obviously, there was bigger news during the after hours on Wednesday, but we'll get to that one. CrowdStrike. We're going to go kind of backwards here. I'm doing 2 days in one. CrowdStrike blew away earnings. They're right now trading at 194. I bought in at 183. This one traded all the way down to the 160s. The 52-week low was back in January at 150. So at 194, I probably will take my profits on this one at 183. I think I can probably get it back in the 170s on a big market pullback. If you were watching my Twitter this morning, you saw that, hey, the futures were blah, kind of at 7 o'clock. And then at 7:28, Putin himself came out and said, ooh, we're making progress in the talks. I continue to say that he's got some oligarchs and he's got some people that are playing this market. I think the invasion for Putin is more about restoring the Soviet Union to its former glory. I think for the oligarchs, it's an opportunity for them to make money. And I think these guys have some back channel here. The big news is that kind of lifted markets up. The futures look like they're still kind of in place. I still think you're playing oil on this one. I think you're buying Devon Energy every time it dips below 60. I think you're selling it every time it's above 60 for whatever your target price is. But CrowdStrike, great cybersecurity company. Palo Alto is a great cybersecurity company. Zscaler, huge cybersecurity company. I think all three right now, you could actually probably trade all three of these and make money. Zscaler is at 208. They closed. They're opening up at 214. Palo Alto. Let me look real quick on Palo Alto because I think I have a buy on this one. PAN-W is the symbol. Their MACD just crossed down. It looks like on March 7th, but they had their 9-day is just bounced off the 21-day. So I in my mind, this is still a good buy. You're still on an upward trend. We had a buy-in at 531. It looks like I've got to reload my my TrendSpider. So they had some work done. If you guys don't know, TrendSpider is a agile system, and they pretty much run updates overnight. So let's look at this one. Yes, we had a buy-in. It looks like on February 24th at 531, and you're at 551. The algorithm works. Again, you just have to identify the stocks. The only thing that scares me about Palo Alto is this gap that I don't know. I mean, again, we had a golden cross here. I mean, this is golden. March 2nd at 5 when the stock was trading at 551. We had a golden cross, and it's held up. It's using that 200-day as support. I don't mind any of these cybersecurity companies. So that's a look at CrowdStrike. We had oil. Well, let's talk about the big news on Amazon. Amazon's my second, I think Amazon or Microsoft might be it's my second or third largest position in my portfolio. It's been a dog ever since November, probably all the way back to July. It just really hasn't done much. I mean, in November, it was trading up at 3,700. Today, it's at 2,900. The only catalyst for this one is the stock split. The buyback that they did of $20 billion, that's nothing. It's a drop in the bucket to these guys. But it does show, here's what it shows. And this is important because in my mind, Amazon is a big, one of the ones. Do I think it's going to 4,000? Probably not. Maybe after the split, it starts to run up more. You look at the split that Apple did. You look at the split that Tesla did. Those companies didn't necessarily do more. They just split the stock and people were able to buy it. The other thing that the split does is allow it to get talked about it as a Dow Jones component. So I don't necessarily think it changed anything, but what it does show is that Andy Jaffe, who's the CEO, the new CEO, may be more apt to play this quote unquote stock market game, whereas Jeff Bezos was not. He may be saying, you know what? Our stock has slipped. I know that a lot of our executives not necessarily haven't been seeing the stock valuation that they're used to over the past few years. The other, and I heard this, I think from Joe Terranova or somebody on CNBC, but this was a great indication. They have millions of employees. The majority of their employees are sitting out there in vans, and they're in the logistics portion of this company. The logistics portion are drivers, warehouse personnel, blah, blah, blah. These are people who traditionally haven't been given stock. But you know what? With the stock split, you could give somebody a bonus of stock even at those logistics level employees. You could allocate 10, 15 shares of stock as a bonus. Get these people invested. It's also shown with larger corporate ownership comes more ownership of the customer, more ownership of the process, and greater shareholder value. So you've been able to show that over the years. So while I don't think that a stock split actually does anything, I'm a big believer that a stock split is a stock catalyst. And the history of numbers kind of points that out. So with that, let's look at the top 5 inside buys from this week. I see this every Friday at 5 a.m. on CNBC, and I love it. But there's one that was really interesting, and it's the top one. It was a almost $20 million buy from the CEO. Let me see his name. And what's great is TrendSpider allows me to see this. It was Harold Hamm, who's a director. He bought almost $20 million of the stock on this week. Well, the stock this is a resources company, Continental Resources, CLR. The stock just went through earnings. He wound up buying all of this stock. Well, it just got a dividend payout, it looks like, or no, ex-dividend to date. But the stock has been soaring. Even though the stock is up 33% year to date in a down market, it's up 33%. This guy bought $20 million. That is, hey, this guy believes in this company. Something's coming up. This is again, you'd be in this company at 56. Today, let's see what it's trading for today. CLR on Active Trader Pro. It's at 50, it closed at 59. It's at 58. Again, this thing about the inside buyers, the market has priced this in. The market knows this. Ran up yesterday to 58 to 60. It's trading back down to 58. I think in this market, you could probably hold this one back to 56 at some point. It's using the 200-day as support. There's a couple of gaps down below here, but there's a gap up above at the 57 level. It looks like. I think you could definitely invest in this one and be completely happy. It's got a 1.55% dividend yield. That dividend X date just passed, and the dividend pay date's coming up. So you're not holding this one for dividends. Speaking of dividends, Thomas pointed out ZIM. Their ex-dividend date is on March 22nd. That means you have to buy before March 21st. It's trading at, looks like $76 this morning. I think you could buy this at 75, 74. But again, this has been such a high flyer. I expect it to continue to fly into that ex-dividend date. You have to buy before March 22nd. So by March 21st, you would have to buy to enjoy this dividend. It's a $17 dividend that's being paid out. So you're buying a $70 stock and then you're getting paid every share for $17. Now, remember, when the ex-dividend date passes, this stock's going to drop down from 70. Say it's trading at 70 on the ex-dividend date. It's going to take $17 out of that share price. That is essentially what happened. When you look at the past, and these ex-dividend dates that come. Running up to it, it seems like it takes the dividend out of the stock, but this one particularly continues to move up. And every ex-dividend date that you see, it bounces off the 200-day. It may break the 200-day, but it bounces off the 200-day. So you're probably looking at a $58, $59 stock, but you're getting paid $17. So you wait for it to go back up to 70. GOGL is a good example of this one. That's another shipping company. They had a dividend date, ex-dividend date of March 7th. I got in on this one. It was 90 cents per share. And this was trading at about $11. I think I got in at about $10. But I bought 1,000 shares. Wasn't that big of a buy, but get paid $900 on that one. And it's just like I thought, dipped down after the ex-dividend date. It's climbing back up. It's using the 50-day right now as support. You had that golden cross on February 7th. I'll probably get out of this one if we ever reach into the 12 or 13 range. Today it's trading at $11.93, so it's getting close to that $12 mark. But I'll get $900 plus I get this stock gain. So that was a good buy. Let's talk about China stocks absolutely getting killed if you own them. I haven't listened to this one, but BABA. I own $20,000 worth of BABA that is now worth about $10,000. So I just, again, this is a falling knife. I've been told to get out of this one. Should have absolutely been out of this one. I think I was up 20, 30% on my initial buy. Now I'm down about 50%, maybe even 60%. Let's see exactly. I'll tell you exactly. I own a bunch of this, and that hurt's going to lose, but I'll just write it off against some gains that I've had too. So it's not too big of a deal. Again, when you have a portfolio, you can write some of these losses off against gains. Yeah, I've lost $12,000, so I'm down 56% on this one. So not a good one, but if you're in any China stocks, get out. There's no buying the dip on this one. China has said, hey, we're taking a look at this stuff. This is a portion of economic war. Essentially, the SEC has said, hey, we want more insight into these earnings. We want more audit capability. China has said, no, you can't have that. So there's a bit of a war going on. And remember, all of the China stocks like BABA, you don't own the company. You own something in the Caribbean that is something like the company. This was a way for them to get into the U.S. market without all of the SEC regulations of the market. So it's kind of like crypto. You don't hold your keys. You don't own the coin. So I'd say get out. Don't buy the dip on this one. There's a couple of good buys that I've identified. I think CLR is one that you buy. There was a big buy from Wayfarer Insider as well. Oil is not over. I think UCO still has room to get back to those levels of just a few days ago, where it was trading in the close to 200. You're at 150 now. Why do I think that oil is suddenly going to have this glutton and drive the price down? I think what you're seeing now is some manipulation in the oil market, and you're seeing prices being artificially held down. But as we get into more demand, again, they can't turn on the spigot. And some of these oil, some of these guys who are going on TV saying the Biden administration isn't allowing us to drill. These guys, if you could guarantee them that oil was still $120 a barrel, like it is today, 6 months from now, these guys would be drilling unbelievably. The problem is you can't guarantee that. The government doesn't want it at $120 a barrel. The government wants it at $80 a barrel. So while they'll say, hey, there's all of this regulation and blah, 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 that's BS. Again, the regulation isn't the problem. It's the price of the oil that's the problem. And some of these governments can manipulate the market and move some supply. And, again, if Russia puts it back on the market, boom, the price comes down. Whatever you think, if these guys could drill, they absolutely would if they could make money. It's not the regulation, it's the dollar amount. And they are more than happy at keeping the dollar amount up at 120. CVX has always been a great buy. You're at 170 right now. It's trading pre-market at 165. That's because Putin's talking about you know, the peace in Ukraine talks going well. XOM closed at 85. It's down to 84. UCO, I think SCO today in particular is your play. UCO is trading up at 151 with all of the oil stocks down, but UCO going up. I don't know. SCO, in my mind, I think SCO at 635. I think you could probably snag it at about, you could have gotten it at $6. My guess is it comes back down to 620, 622. And you could snag that and probably ride it up to 7 at some point over the next couple of weeks. So nice 10% gain. I think I'd be perfectly happy with a couple of weeks of that kind of gain. SCO, I think, again, is your play because I think the futures market is playing with the oil price. So another one, Visa, symbol V. This one is trading at, it's over 200. Get it under 200. Let's see about the chart and trend spider on the algorithm. I think if you bought this one under 200, there's a MACD cross up that's going to happen today. So I think anything under 200, you're probably looking at 220 in this one when it gets back above the 200 day. Trading the trend on this one is kind of not your friend because the trend has been down ever since it kind of hit its peak of 250. And it's just kind of been in this downward market since August. But Visa, MasterCard is another one. I think that one's trading at MasterCard MA. MasterCard is MA. I put it in MC for some reason. But MasterCard is one that, let's wait for the algorithm to run. In my mind, it's trading at 324. Let's see what the algorithm says. It's also got a MACD cross up. This is kind of this runs right in line with Visa, a little bit flatter than Visa. You've got a little less upside on this one in my mind, but again, you've got a MACD cross up. You've got the RSI low. I think this one's ready to run. In my mind, let's see the volume shelf that we see here. Yeah, there's a volume shelf here about 320, but there's also a volume shelf at 340. The largest volume shelf seems to be right around 375. So I'm not saying it can get back up there anytime soon because I think it's got a long way to go and the economy per se has a long way to go. But again, with rising interest rates, MasterCard makes more money. With everything that's going on, MasterCard, buy now, pay later, they've shown they can do it. Amex is a great stock, AXP. Let's take a look at that one on TrendSpider. That one is running here at 169. It dipped all the way down to 155. Their ex-dividend date is coming up on April 7th, which should be a catalyst. You've got a MACD cross up, just like you have in Visa and MasterCard. I think I'd take the chance when you're looking at the, let's pull this volume chart back here. You've got some volume shelves right around 170, it looks like. So again, their earnings on the last one kind of disappointed. 218 versus the previous one was 227 versus the back in July it was 280 per share. So I think you've got some opportunity here. Again, AXP is an open play with business coming back online. So oils, Visa under 200, Amex, I think anything under 170 is a good buy. By the way, one that we talked about that I always thought was a good buy and still continue to think is a good buy is Qualcomm. That's trading at 154. They just upped their dividend. They've got a death cross right now. I know I said anything under 170 on this one you should pour into. The chips have been hurt, and they've been hurt hard. Ever since November 7th, it looks like this one has been just an upward tear. It's got this gap between 153 and 138. In my mind, I think that gap may start to get filled. So in my mind, I think you wait for anything under 140 on this one. 140 might be a good target price on this one if it comes down to that level. It's kind of traded just a little flat. It's got that death cross, maybe taking some time. I think by the end of the year, you're looking at a $200 stock again. There's some of the plays that I'm looking at. Again, today, I don't think I would necessarily buy anything other than those long-term plays of Visa, MasterCard, Amazon, Oracle. One that we talked about, MRNA. I'm a big believer in this one. They are trading right now at 139. I think if this one goes to 135 or so, we've got a buy-in here at 139.51 from yesterday. There was a buy, it looks like on Wednesday at 142.41 as well. So the algorithm is saying buy this one. It's kind of trade the trend on this one. The 200-day is, we had a death cross way back in November. It's kind of gone down ever since. The market hasn't necessarily loved this. But if you don't think that there's going to be another variant, remember, what was it? Delta showed up in June last year. It was a summertime surge. So there's going to be booster shots. There's going to be other things. Josh Brown on CNBC said he liked this one. I like this one as well. I think dipping my toes in around the 125 to 135 mark. I may put in a buy, seeing what it does today. Not quite sure where it's going to go, but you always just get these. I mean, this is all a hype run to. You could trade this one. Look at yesterday. I'm sorry, looks like Monday, the 8th. This one was at 123. It's up at 140 now. So again, I think those 120 levels, anytime it dips below 130, there's a volume shelf today. It looks like at 141. So I think that's where it's probably going to trade to today, at least at the open, depending on what we see from. But at some point, you're getting the coronavirus back in the news. mRNA is a great buy. So I've given you some ideas. Again, typically buying and holding. I expect to see some selling in the afternoon. I think that news from Putin, it's settled down now. The futures are up. The NASDAQ is up 3%. It looks like the Dow is up 200 points. So, you're going up with the news, but it's about half of what it was at 7:30. And you're at 9 o'clock right now. So trade carefully. I do expect afternoon selling to come in to pressure the market. We're not out of this. I think you're going to break those February 24th lows. So when I look at the SPY chart, it's ugly. There's no support levels that I think are comfortable. Next week, you're going to start to see inflation rates coming in. And inflation's going to be the story in the market that they're scared about. Again, with SPY in particular, if you're looking long term, they're just building volume shelves here between 420 and 440, it looks like. That's where kind of the comfort level is. But you've got a February 24th low of about, let's see, the low was 410. I think Apple, great example. Apple's just got no support level. This one is going to be the one that brings the SPY down. You're seeing that 50-day move right towards that 200-day. It's already the price action has already beat the 200-day, and we're trading below the 200-day. But once you see that death cross, you're probably going to see a leg down. My guess is probably below 150. I don't think it's going to hit the 140 level, and break through that to the 139, 138. But I do think 150, 145 is in play. When that happens, load up. Just load up. Let's see what the anchored VWAP says. Anchored VWAP is saying down. There's no reason to throw money into Apple long term. You could trade it if you wanted to, but I do think that there's an opportunity here to buy some of these things. I'm looking at my portfolio in the pre-market, everything except for Ethereum and Bitcoin, and oil. Occidental's down 1%. MPLX is down 0.3%. Exxon is down 1.5%. So you're looking at oil's down, everything else up. You got one of those days like Wednesday. I think it was Wednesday that was the big mover. But I think in the afternoon, you're going to see a whole different story. So good trade ideas, good talk. Have a great weekend. I will talk to you Monday.